Good morning, everybody, and thanks very much for joining us for the next session of PPN Presents. And this morning, we're going to be talking all about how to minimize risk in finance. And I'm delighted to be joined in the conversation by Tom Powell, who is a solutions consultant from Bottomline. Thanks for joining us this morning, Tom.
Yeah, morning, Ellen. Lovely to join you. Thanks very much for inviting me.
It's a pleasure, and a nice, bright, sunny Friday after a very, very windswept and blustery Thursday. I was up in London yesterday and I was almost swept across London Bridge, but yeah, nice bright sunshine this morning. Thanks for joining us, Tom. So talking about minimizing risk in finance, and I think first of all, maybe let's think about the background which we're all operating in. And I think, with some of those disrupting factors like, tariffs, high rates of inflation, some of our fragmented supply chains, do you think that with all that and taking all that into consideration, we are at a more diverse risk environment at the moment and that it's maybe more tricky to understand? What are your thoughts on all that?
Yeah, certainly. I don't know about more so, but there's so many factors today that we
Mm,
need to consider, and then they combine together to make what is really an extremely complex risk environment. So I guess, yeah, like you say, finance teams are sort of trying to balance high inflation,
mm,
interest rate fluctuations, the knock-on effect into sort of cost of borrowing and
mm,
consumer demand. You've got all these sort of big geopolitical changes that are going on at the moment with sort of sanctions and tariffs
mm,
and the knock-on effect into the cost of import and export. And then on top of that, I guess technology landscape is changing probably faster than we've ever seen it change before, and we're being
mm,
asked to understand these technology changes. Obviously, everyone is talking about AI.
mm.
No one wants to be left behind in the adoption, so we're trying to find new ways of using that technology and new ways of combating that technology.
Yeah.
Um, we've got we've seen significant impact of sort of tech changes over the last few years in particularly cybersecurity and data protection space. And
Mm,
I mean, this year alone, I've lost count of how many high-profile incidents we've seen and the impact that those have had on household brand names.
mm,
Over and above that, like you say, we've got changing workforce dynamics, the new normal, this hybrid working, remote working, and managing the challenges and the opportunities that that's bringing. So there's quite a lot going on at the moment, definitely.
yeah, and I think you touched on it there that it's actually quite hard to monitor all those different diverse aspects of that risk and where that risk might be coming from. And you mentioned some of those high-profile names that have been caught out just recently by some of those cyber attacks, etc. So it's almost having that almost that tension around, well, where's the next thing going to come from, and make sure you have all of those factors in your sights when when you're thinking about how to protect your organization. But do you think that it impacts finance departments more than other areas of the business, or do you just think that it impacts differently?
Um, Yeah, I don't know about more than, but yeah, I think maybe more directly.
Mm,
Like financial planning and forecasting is obviously going to be affected directly by all these changes, volatile interest rates, etc. It makes then planning for like liquidity more challenging,
mm,
and obviously the associated risks become greater. And then we seem to be getting more and more exposed to the changing technology and tasked with implementing best practice with that backdrop in mind, um, and not necessarily being experts in the technology. So I think, yeah, definitely a significant impact on finance departments.
yeah, and I think that when you've got those kind of impacts coming at you alongside some of those external factors that we've just talked about, it helps build quite a challenging picture, I think, for our finance teams at the moment. And you sort of briefly touched on it in your opening comments as well. But what about fraud? in your experience, do you think that we have seen more instances of fraud impacting our organizations, say over the last 2 to 3 years or so? What's your opinion?
Yeah, definitely. So, I mean, the industry in general has seen a massive rise in both the volume of fraud and particularly the sophistication of fraud
Mm,
over the last couple of years. Fraud's now estimated to account for about 41% of all crime in the UK. So, like
mm,
authorized push payment fraud and identity fraud have risen sharply, probably influenced by sort of instant payments and going back to sort of generative AI, that sort of thing.
mm,
Um, Rising cost of living and inflation over the last couple of years have led to an increase in opportunistic fraud. So we've seen a sharp increase in sort of financial services and e-commerce.
mm.
And from a bottom line perspective, with our sort of mid-size and our enterprise customers, we're still seeing basic fraud like business email compromise and internal fraud just based around simple diversion of funds.
So that, I mean, yeah, I mean, all of those original reasons and factors and ways into the business are still there, alongside all of those new factors as well, like cybersecurity that we just touched on, and again that just builds into that greater risk environment. And just from a PPN perspective, we still see. In fact, almost weekly, we report on instances of fraud that are what you might say kind of traditional, those kind of collusion frauds with suppliers, or just change of bank details, which seems so simple, and yet it keeps being repeated. And I guess we just need to do what we can to try and control that as much as we can. I'll talk about it a bit later, I'm sure, around technology. But in your experience, again, what do you think is the most common route into the business for those fraudsters? Do you have a view on what's the most likely area that we need to sort of focus on?
I think, I think social engineering, sort of phishing, these are the most common paths that sort of your bad
Mm,
actors are using to get into organisations and around controls. Um, but technology vulnerabilities are so minimised and actively managed that the weakness in today's organisations are the people.
mm,
I think phishing emails are responsible for something like 85% of cyber incidents today. So
wow.
bad actors are benefiting from now incorporating AI into these processes, making it
Mm,
faster, easier. They can really personalize these phishing attempts, and they can use it to bypass filters as well.
mm,
Obviously, like you say, the tried and tested. We've changed banks, sort of emails and letters. They're as true today as they ever have been.
mm.
Um, but yeah, certainly social engineering.
Yes, but so what can organizations do to protect themselves? And I guess also, where should they start if they're thinking, do you know what, I'm not sure that we've got all of these areas covered. Um, where do I start on this protection?
Yeah, so there's a few areas that we could be focusing on. I guess I think bearing in mind what we said about social engineering,
Mm,
prioritizing staff training on phishing techniques, so training staff and testing them, both phishing and other types of social engineering, so raising the awareness. Implementation of a zero trust architecture, I think, is very important. So embedding principles like least privilege and multi-factor authentication,
yeah.
so that if someone does manage to get into the organization, you're sort of limiting the amount of damage that can be done.
Mm,
I think we should be looking at AI-powered fraud and risk detection in the payment lifecycle and in that sort of email and communication systems. And then the services like confirmation of pay that you can implement to check all changes to vendor and employee bank details, and they should be embedded into your processes.
So I guess a combination then of adding technology, looking at your existing processes, and also that important piece about communication that you mentioned just then. And I think that that awareness thing is so important, isn't it? Because as you say, that AI is becoming so much more sophisticated these days that it's almost able to be, so it's, I think, like 99% human, and it's very, very tricky to be able to see past that. So the communication and the training is going to be key and really important in those instances. Um, But do you think an organization can be truly risk-free in a more manual environment?
Well, no organisation can be completely risk-free,
Mm,
but I guess a manual environment will inherently be more risky than an automated one.
mhm,
Like human error is unavoidable, that people are going to make mistakes. The more manual processes that you have, the more opportunity there is for internal fraud, and then you tend to limit visibility. So where data and reporting is sort of pulled from disparate systems and typically into spreadsheets,
mm.
you're reducing that sort of visibility through the business. So um, no, I don't think an organisation can be truly risk-free in a manual environment. But I guess in the interests of balance, manual environments with good, simple processes and strong government can become resilient to a lot of these risks. But I guess it doesn't tend to scale very well.
No, and I suppose it's about, as you say, increasing that visibility, because without the visibility into your processes, and I guess the reporting that comes from that, it's very difficult to narrow down those or even to see those risks that are
Yeah.
coming into your business, especially with the increased sophistication that we see now. And what a shame, we can't reduce risk. I mean, to be honest, it depends with the angle that you're coming from. You can't eliminate risk, and I suppose you don't necessarily always want to eliminate all risks, because if you're working in a finance department, if you're a CFO or financial controller, for example, you've got to take some risks, but they're with the business, but it's controlled and knowing where they are. Um, but what do you think, from your experience, gives a CFO the most comfort when you speak to them about minimizing their exposure to risk, safe in the light of fraud, for example?
Um, yeah, I guess a few things. Visibility, certainly you mentioned it. So being able
Mm,
to see what's going on, having that oversight, visibility through the business. If you can't measure it, you can't improve it.
mm,
Certainly, I think ownership as well. So we need to know that someone in the business owns that risk and is actively seeking to identify new risks and seeking solutions and reduction within that space. So ownership of those risks. I think obviously automation, it pays dividends, reduces mental effort, which reduces that risk of error and obviously the internal fraud. And
mm,
then testing these systems. So putting the systems in place and then testing them to ensure you've got the resiliency. So good,
mm.
strong sort of testing and audit trails.
Yes, and I suppose that. And what's your thoughts about sort of ring fencing different areas? You talked about testing and trying. So if you're maybe looking at different areas of the business, would you sometimes recommend ring fencing a certain area?
Certainly process owners, and I think specialties need to work within their own, within their own ring fenced areas.
Mm.
And I think you can look to isolate high risk parts of the business, like you say. It's impossible to completely eliminate. Um, but what we want to do is we want to be as cost effective as possible with the controls that we're putting into place.
Yeah, that makes sense. And so if a company does choose, for example, to look the other way, perhaps considering themselves not in any danger to that risk, what would you say to them?
Yeah, so like you say, it's always going to be a balance. Every
Mm,
company's going to have to make their own decisions about where they draw the line. Um, Obviously, we mentioned earlier, there's been a few high-profile cases in the news this year alone, where reputational damage has been done. We've
mm,
seen operational disruption. There's fairly obviously legal and regulatory consequences as well. Ultimately, the bottom line is going to be liquidity and solvency.
mm,
There was an example, I think, earlier this year about an organisation called Nalato J Care, who were defrauded for between sort of something between 600,000 and 1.6 million pounds over a 4-year period, over 84 fraudulent payments. Um, the impact was a business unit was closed, and 125 people lost their jobs. So there
mhm.
are real world ramifications to not having the correct controls in place.
And I think that's the thing to bear in mind. I think particularly if you're talking around a subject such as fraud, for example, it's very easy when you're thinking about it in terms of a large organization to think that there aren't going to be those real world risks. But like you say, businesses close as a result of it, and people's livelihoods are directly affected. So it makes sense to control those areas of risk where you can. And of course, you mentioned legislation. We've got the new legislation around fraud and the failure to prevent, which came into force on the 1st of September. So there's obviously compliance and regulatory issues that you need to be aware of as well. And it's funny, when we were talking just then, I brought to mind that one of the biggest areas to overcome are sometimes that feeling that it can't happen in our organization. It's just like, I won't necessarily put those things into place because those risk factors, and particularly in relation to fraud, won't happen here. And that's quite hard to overcome.
Nobody believes it's happening, or nobody believes it's going to happen. Nobody believes it is happening at the moment. But the evidence suggests that statistically, it probably is happening at the moment to you.
And I suppose, like we were saying just now, the more manual an environment that you're working in, the harder it is to actually be able to control and monitor what's going on. And then just sort of finally, some of your thoughts from your experience. What are your top tips and recommendations to business who are looking to minimize that exposure?
Yeah, so I suppose going back over some of what we've talked about already this morning, and trying to keep it maybe simple. Education, so educating your staff to understand what is going on, and the evolving risks. Automation is always going to close the air gap, look to reduce that risk profile. Validation, so we talked about confirming bank details, something like confirmation of pay, checking the information, the data that's going into the systems. And I would say something that maybe we didn't touch on so much, but resiliency planning. So making sure that should something happen, that we can recover quickly, and we minimize the impact of any events.
Yeah, I mean, actually, hearing you say that, I was talking to an organization a couple of months ago where they did actually do that. They had that planning in place. And when they actually then did unfortunately fall victim to a potential fraud, they recognized it before it came through to and affected the business in real time, because they had done that resiliency planning. And so it's very important, as you say, to make sure that you've put something like that in place so that when hopefully nothing ever does happen, but if it does, you're ready and prepared.
I think, unfortunately, you're right, Ellen. It's kind of a when rather than an if at the moment, isn't it?
It is. I mean, I think you just have to think about it in our from our personal experiences. That I sometimes look at my phone and we have these, like say, phishing attempts and what have you. And if that's happening to us in our personal lives, it for sure is happening to us in our businesses as well.
Agree. Yeah.
Well, thanks very much, Tom, for sharing some of your experience. Have you got any sort of other comments that you want to make before we sort of wrap up for this morning?
No, I think that's it. I think concisely, education, automation, validation, resiliency planning. Those are my key takeaways today.
Fantastic. Thanks very much, Tom. And thanks very much for everybody for listening to us this morning. And I hope you have a fantastic weekend, and we'll catch up with you again next week. Take care. Bye-bye.
Lovely. Thanks, Ellen.